good evening, everybody who's dialing in from Asia, and good morning to those of you who are in New York as well as in Europe. It's our pleasure to have you for the panel discussing about TechFin 2.0 and the new age of digital finance. This panel will have esteemed speakers both from the United States as well as from the Middle East and India. My name is Mushir Ahmed. I am co-founder of the Virtual FinTech Fair and also the founder of FinStep Asia. Our participants for today are Ms. Melissa Frakman, Ronit Ghose, Chandan Joshi, and this panel is to be moderated by Aditya from Medici. He's dialing in from the East Coast. The US is facing some power cuts due to the storm that has hit the East Coast, so we're just trying to get him back on. Aditya, have you managed to dial back in?
I'm back on audio and hopefully on video soon, but thanks Mushir for the introduction. I'm here.
No worries. So we can start off with each of the panelists giving us a brief introduction about yourselves. Why don't we start with you, Melissa, and then once we finish that, Aditya can take charge in terms of running the panel discussion. Thank you.
Hi, everyone. It's a pleasure to be here with you across time zones. I'm Melissa Frakman. I am the founder and managing partner of EMVC. We are an early stage venture capital fund based in the US, investing in the most exciting emerging markets, fintech, primarily in India at the C to Series A level. We look at early stage fintech from a very cross-border and strategic focus, and are partnered with a consortium of some of the largest financial institutions and fintechs in the world. And I'm calling in today from Washington, DC.
Thank you, Melissa. Ronit, over to you.
Thank you, Mushir, for inviting me. And also thank you, Aditya. My name is Ronit Ghose. I work for Citi Research. I run our global banks and fintech franchise. I'm based here now for the last 4 years in Dubai. Previously, I spent close to 20 years in the UK working for Citi.
Pleasure having you. Chandan?
Thanks, Mushir, and thanks, Aditya. So I'm Chandan Joshi, and I'm heading payments, which is payment gateway as well as wallet business here at MobiQuick, which is one of the largest payment providers here in India, and I'm based in Gurgaon.
Thank you. We have our other panelist, Mr. Varun Mittal, who has signed in now. Varun, could you briefly, quickly introduce yourself to the audience, please?
Hi, this is Varun. I run FinTech for emerging markets for global markets at EY. Used to run a startup before and very keen to join all of you. Sorry for being delayed.
No worries. We had some technical glitches, so started a little late. So you're just in time. Aditya, over to you to make your introduction and now lead your full panel to the fruition. Thank you.
Great. Thank you, Mushir, and thank you everybody for the quick intros, and thank you to the audience who has been patient with us as we've had these technical difficulties. So I apologize for that. Hopefully everybody can hear us at least okay, and can also see my fellow panelists. There's not much to see in my face, so I guess you're not missing too much with that. So we have had obviously a fantastic lineup already that Mushir and team have invited so far. And this being the last of the conversations, I figured that we could keep it a free-flowing conversation and really tap into the expertise of all of my colleagues here who are more than qualified to talk about anything and everything in fintech. So having said that, I do want to respect kind of the topic at hand that Mushir has given us, which is TechFin and what that means specifically in the India-Asia context. So we'll try to stay focused on that, but we are going to keep it an unscripted conversation. Let me put my friend Varun on the spot first. Since he was the last one to join, I guess he deserves the first question. Varun, how do you define TechFin versus FinTech? What is the difference in your mind?
The way I would look at is what was the core business of a company before they enter into financial services. So most of the companies which we see these days are a technology company first. They are either using technology to get taxis, get food, they serve telecom, serve chat. So they are a technology first company. And once they do that, and then they expand into financial services. So financial services is an afterthought in the origin and the scaling of that company. So that's how I look at as TechFin. In the first iteration, we had a lot of companies which went after, let's say, a robo-advisor, which was, they were designed as a financial services company who was using technology to move faster, lighter, cheaper. So first generation, we had a lot of fintech who started to financial services with technology. And the second generation, which has seen the much 10 times, 20 times bigger players, are who did another business first and they expanded into financial services.
So let me take that definition and ask Chandan this question, right? You're obviously a younger company than Citi or EY in this space, but you have been around for a while. Do you look at yourself as a fintech or a TechFin at MovieQuick?
So we are a fintech company. So basically, we started business 10 years ago, as a wallet, where most of the users here in India, as you know, that recharge business. So if you go for a mobile recharge, it used to be a very, very difficult thing that you have to go to a shop, pay cash, and the recharge will happen a while later. So we started with simplifying this process, that on a digital wallet, you can, as a user, you can come in, you can use any of the payment modes to add money to the wallet, and then you can start recharging. So we started with this idea that we want to facilitate transactions digitally, for the users. So that is where the origins came from. And then everything else that we have done, it has been, an extension to that.
Right. So 10 years in running, you're running as a fintech, right? So obviously you've gone through kind of your early stage, right? Your early stage growth curve. And we're obviously seeing a lot of excitement here in the market with all of these conversations that we're having, fintech and TechFin. Let me move it to Melissa, who looks at early stage investments, right? And you have chosen deliberately to invest in this space. You have chosen to invest in early stage, and you have chosen to invest in India. You made these choices, I'm assuming, pretty thoughtfully and deliberately. What is it that excites you about the choices that you've made as an investor in this space?
Yeah, India is certainly a roller coaster. So anyone who chooses to deliberately be in it for the long run around the world is very intentional about wanting to do it. The Indian market has unbelievable fundamentals that are sort of irrefutable in terms of the opportunity at hand. We all know that, and we all know the demographic figures, in particular how half the country is still under the age of 25. But in terms of, more specifically, in terms of fintech and payments, what's happened over the past 5 years is this proliferation of a public utility, a public stack of infrastructure on which really interesting fintech products and services can be built. This is sort of the first tech layer of TechFin. And what we're seeing now is sort of the next era, maybe starting now and maybe even accelerated by COVID, is sort of this new era of actually applying this open stack for different use cases that go beyond, as Varun mentioned, sort of the top most obvious financial services plays. So instead of a robo-advisor and a bank and this and that, it's these integrated, moving towards sort of converging of super app technology platforms that are integrating very early stage companies, products, features, all toward a delivering financial experience. We are very bullish about sort of the resilience of Indian entrepreneurs and early stage companies, even during these very challenging times. And in particular, are very excited about what's happening in India, being a model for many other emerging markets around the world as it relates to payments, digital banking, savings, risk management, and insurance, etc.
So you mentioned emerging markets, right? And I feel like that is, that is a term that, is also an emerging term. so to speak. What exactly is emerging markets? And where would you point the finger on the globe today when you say emerging as it relates to our world? So maybe Ronit, can you help us there? How do you define emerging markets for our FinTech, FinServ, TechFin universe?
Sure. The original term emerging markets came as an economics or investment term. And it was maybe a polite word for what used to be called lesser developing countries, or LDCs. To be honest, the term emerging markets is frankly, particularly when it comes to TechFin or FinTech, back to front. I think you're probably sitting in an emerging market right now. I used to live in an emerging market, i.e. the UK. Chandan, Varun, Mushir, particularly if I think about across the board into mainland China, those are in many ways much more developed markets. Think of a real-time payments. Think of how long India's had real-time payments, pretty much universally. Nigeria has had real-time payments for almost 10 years. Much of Europe and even today, US, has only just begun to get real-time payments. So in many ways, this term emerging markets simply doesn't apply. Some of the biggest tech fins, which we're going to talk about in this conversation, come out of China. Some of the most exciting ones come out of India, which many of the panelists either live in or work in. So yeah, I wouldn't call them emerging markets. I'd call them markets of the now and markets of the future.
No, I actually, yeah, I think that is probably one of the, I should say, the fallacies of what emerging means today. I mean, we are seeing so much more proactive and progressive innovation, bold business model, disruptions coming from the largest companies, coming from Asia, right? And I've always faced, this question, or just a thought for the last more than a decade now, that why is it that the big tech companies in the US have not been able to get into financial services as much as they could have, right? And I have my thesis on that question, but does somebody want to pick that up? Why is it that we see this difference where large tech companies on the West Coast of the US cannot do or haven't done yet what the tech companies in, say, China or Asia are doing or have done? Who wants to take that?
The West Coast still remembers the lost decade of Microsoft. The West Coast still hasn't forgot that it's a lot of things which the big tech of West Coast can do, but they do not do because they already have every month one or two senators talking about antitrust and baby bells being replicated. So they do not want the scenario that EU and US start the anti-trade piece. In East, there have not been anti-trade. If you look at the history of East, there have not been antitrust scenario where the companies were broken. It's only happened in West. So that is what scares a lot of those people in West. And for the historical reasons, it never happened in East. So nobody is worried about antitrust. Just now we start to hear some murmurs, but nobody was ever broken in East because of antitrust.
I think regulation is definitely a very important part of the answer, which Varun has just set out. But Aditya, I think the other answer is there was a bigger problem to be solved in the East 10, 15 years ago. So if I'm sitting in San Francisco in year 2000, sure, I could be trying to build fintech, but if I'm sitting in Hangzhou in year 2003 or 2004, or Shenzhen, I have an immediate problem that I need to fix, which is that this digital economy is growing around me and I need stuff to get paid. In the US, sure, there's PayPal and there's been Klarna forever in Sweden and now outside Sweden, but you have an installed infrastructure since the 1950s, right? I mean, Diners Club circa 1950, someone walks into a restaurant in New York and goes, let's have a general purpose credit card. Some kind of card has been in existence in the East Coast from the early 20th century, initially store-based and then general purpose. If you have any kind of online commerce, B2C, 2003, 2004, how do I pay for it? You have to create, you have to create a financial service. So there's a job to be done. There's a clear use case, a need that needs to be solved. And this happens at the same time as the digital revolution, right? Wherever you want to date it. So you've got this big greenfield opportunity, which allows TechFins or FinTechs, whatever you want to call them, to leapfrog the West. A problem becomes an opportunity for the East.
Right. And I feel like, ultimately that is the driver, right? You have to solve a problem. I mean, we have seen in our world, right, when people try to solve problems that didn't exist, that ended up in just wasting resources, right? And I have seen that firsthand, right? We tried to solve the problem of mobile payments by looking at, contactless for the sake of contactless, right? And, one could say that there wasn't a problem to solve in the US. Why bother, right? And even today, after almost a decade of Apple Pay, okay, it doesn't have the numbers that the business cases were showing 10, 15 years ago. Why? Because back to Ronit's point, maybe there wasn't a problem, right? Let me ask you, Melissa, right? As you look at your deal flow and your investment prospects, what are the biggest problems or the most interesting problems that you are seeing founders come to you with for investment?
Yeah, I mean, there are many problems across the socioeconomic spectrum, but as it relates to kind of large macro problems that many different kinds of fintechs and TechFins are solving, financial inclusion for many large developing economies is still front and center. And what's exciting to see is sort of this new era of companies solving financial inclusion in very digital tech forward ways. What microfinance sort of did or claimed to do over the past 20 years is now happening with different kinds of mobile technologies, both on smartphones and even feature phones. And in India, we're seeing a lot of really interesting kind of new models, even more so now in the past 2 years than 5 years ago, in terms of founders experimenting maybe with things that have worked, inspired by what's working for the top 10% of the economy in tier 1 urban cities, extrapolating that, or the opposite, being very close to the rural, last mile, financially excluded markets and starting to digitize them. Also, in India in particular, there's a strong and has been a strong policy push toward financial inclusion, things like Chandan Yojana, opening all these bank accounts, et cetera, low balance, zero balance bank accounts. And interestingly, starting to see some interesting fintechs come up in terms of actually scaling that. You can almost think of it as bridging the gap between that and what the telcos and kind of larger TechFin super apps will do. Otherwise, we're seeing a lot of interesting things right now in InsurTech, changing the way Indians will save and invest, and lots of interesting things starting to be on the B2B and enterprise side in terms of how legacy financial institutions modernize with sort of new SaaS and other kinds of software.
Go ahead.
So just to add to that, Melissa, what you rightly pointed out that most of the focus right now in India is on financial inclusion. And it looks like that for next few years that is going to be the trend. So it's amplified by the fact that COVID came at the time, and simultaneously Jio Facebook deal which happened. So I think overall, if you see that 300 to 400, so until now most of the digital transactions, they were done by, I would say, 50 to 60 million users in India. Even though a lot of users, or more than 900 million users, they have bank accounts here in India. But then onset of UPI, then government is actually pushing pushing for financial inclusion in terms of providing zero balance bank accounts. Neobanks also coming into the picture, which are targeting each individual use case. They are targeting different markets. So the way it's going to go forward, I think tier 1 and tier 2 cities, they are anyway, most of the people have access to, I would say, digitally available fintech, financial resources, if they want to invest or if they want to, buy insurance. But I think this deal between Jio and Facebook, this is going to take it beyond that, so tier 3 and 4, which has been left behind, for a while, just because cost of actually doing business and entering those markets, it's just too high for any small company to do, so now I think because of, again, WhatsApp is available, used by, enough number of users all across India, even in villages. And now Jio is, for example, has launched Jio Mart. So users can, start placing orders using WhatsApp. And I think the basic extension of that is going to be that most of the users who are Jio customers using WhatsApp have they will be added to the e-commerce customer base. They will all learn to place orders on that. And then, of course, the next step is obviously, financial services, which Jio can, deliver to the masses, which are in tier 3 and 4, where it's not physically possible for somebody to go and, physically go there and sell or provide financial services or advice in person.
So, I think you are, taking us to the original theme for this conversation. So thanks for that, Chandan. And I want to double down on that, right? So we are looking at the Jio family of large scale disruptions that are happening in India. I mean, it started with Jio itself, right? I think Jio itself was a massive disruptor to the other telcos at the time. And, there's a school of thought which says that, did it help or hurt, right? But I think in terms of innovation and consumer choice, obviously, it's a fantastic thing for the ecosystem. And now we are seeing, partnerships with other large players in the tech space that Jio is doing. But there seems to be a different flavor for this convergence, if I were to use that word, in India as compared to, say, the super apps and the conversions that we saw in China. How do you compare this, Varun, from your vantage point, kind of the way large entities or large investments have happened for a consolidated experience in China versus what might be beginning to happen in India? How do you compare the two?
One of the key difference between China and India was access. And it is known that the access to Chinese market was significantly controlled from a lot of aspects. A lot of large global companies tried to operate. There are two schools of thought. One school of thought is they couldn't compete. The other school of thought is the requirements set upon them by the government regarding handing over some of the data elements and some of the localization and storage elements were designed in a way that they couldn't operate. The end outcome was that the local companies became so large, even though they had some foreign investors, but the control remained with the locals. And that was something which helped create those mega super apps, global giants as we know them. Versus as if we extrapolate that to India, India had always no foreign ownership limitation for most of the sectors, except for regulated financial entities. Most of the segments didn't have any limitations around ownership and foreign control. So India received a lot of investments also, but it was nowhere close to that scale. So even at the early stage, the companies would have, you would have international people taking control. So as if I roll it back to, let's say, what happened in 60s and 70s in Japan and Korea, where the domestic industry was shielded for a long time till the local players became large enough to compete. That level of protectionism did not exist. Post-liberalization, all sectors were opened almost equally. So what we see in India now is, we see a lot of investments, but we do not see as many local homegrown players. I mean, one player, which is Jio, is like an outlier, but because it was a very huge traditional business, which got into this, we did not have built from scratch. And again, MobiKwik is a great example, but how many of those are there and how many of them are at the scale at which you have the internationally owned? So the lack of protectionism for the local entities or local businesses has impacted the development of local global giants?
So let me turn it to Ronit, right? And I know he's really missing being on a plane these days, right? He loves to fly, he loves to be stuck in an airplane, and now he's stuck in Dubai. So let me ask you about Dubai and the Middle East, Ronit. They have the advantage of having seen these various ecosystems with a variety of different models, right? Government-led, regulator-led, tech-led, bank-led, I should say, top-down prescriptive innovation versus bottom-up, collaborative innovation. All of the models, we have seen a variety of the models around the world. So the Middle East has the advantage of learning from them. What are we seeing? How are people learning in the Middle East?
Sure. So there are lots of points we could make around the Middle East, and I'll sort of go one by one. First, from a perspective of capital, the Middle East has tended to be, particularly the Gulf, an exporter of capital. And capital has gone out of the Middle East and funded investments historically in the US, in tech, and more recently, obviously, also in India in the recent Jio fundraising round. So capital has historically gone outside, and the venture capital, be it independent or corporate venture capital markets, relatively small, growing, but small. Second point is that the banking industry has been, particularly in the UAE and Saudi Arabia, in the larger GCC economies, very, very profitable. These are dollar-linked economies with strong profit margins and relatively low cost bases because of a bit like Hong Kong, the consolidation. You need a small number of branches and a small number of cities. So you can make a lot of money. There's a big moat around the industry. It's called regulation. So sometimes the push hasn't been there to go and innovate. And that's changing because, and this is point number 3, which is that policymakers, whether it's in Abu Dhabi and Dubai and Riyadh, all over the region, are super focused on trying to digitize the economies here. And you can't digitize the economies if you don't change it. And in many of the consumer behavior patterns, economies like Saudi Arabia, I mean, no surprise Dubai is digital, but places like Saudi Arabia have some of the highest interaction levels on Twitter, on Facebook. So actually it's a very digital, in a social sense, digital economy. And through top-down government pressure, through central bank pressure and government pressure, you're beginning to see more of a, take for example, like you've had RuPay in India, you've got Misa and Mada in Egypt and in Saudi Arabia. These are national payment schemes, low cost, meant to push digital payments. And obviously right next to the Middle East, you've got some pretty exciting markets. I don't know where you put Egypt, Middle East or Africa, but Egypt is a fascinating market when it comes to fintech. Nigeria is beginning to, the last 12, 18 months, really grow. South Africa's always had pockets of capital. So there are real hotspots in this if you take the broader kind of Middle East, Africa region. There's a lot of kind of startups focused around the UAE, particularly in Dubai. It's miles behind what you've seen in India, maybe, but there's a lot of activity and momentum here. So watch this space, ...
Right. Look, I think it's fascinating, and I think just the conversation that we are having so far, right? It's so easy to jump from one theme to another, and I want to cover a few points here, still in the time we have, and so I'm going to keep jumping around, guys, if you don't mind. But this is important, I feel. Especially for the times that we are in, right? There is so much going on in so many different sectors in so many different parts of the world in so many different ways and with so many different players, right? I don't think, there's more complexity that we could ask for. And, for those who are not familiar, one of the things that we do at Medici is to try to unravel this complexity. We try to do that by publishing content, simple, right? We publish research, we curate data, we share that with the largest audience in fintech, and we do it in a digital way every day in various formats. And very proud to have partnered with Virtual FinTech Fair as we launched our Global FinTech Exits report yesterday. So those who haven't visited our booths, I encourage you to go do that and take a look and learn about where people are getting exits and how and the valuations and all of that exciting stuff. And that pretty much leads me to my next question. And just a warning, guys, the questions are going to get harder. Okay, so if you haven't if you haven't taken your coffee, the vitamins this morning, well, you are in tough luck. Melissa, one of the criticisms in the early days of I shouldn't say early days, but kind of halfway through the Indian tech, even before it was fintech scene, was that because the government invested in things like Aadhaar and India Stack and nationwide infrastructure, that actually made it harder for startups to differentiate themselves. Do you subscribe to that view? Has the infrastructure investment from the public utilities helped or hurt startups and startup founders?
So I think it's a fair, I wouldn't even say criticism, but fair analysis that the proliferation of some of these public stacks have added complexity and major challenge to business models, not just for startups, maybe even more so for large corporates and foreign investors and MNCs that have been entering India across these spaces. However, startups by definition have to innovate in the market and solve real problems and pain points in the markets in which they operate. And so for many of them that were complaining during that time, including to me, frankly, I don't buy it. I think that the entire point and reason for being for them is to solve problems within their markets. And if there is infrastructure that solves part of it for them and takes kind of the baseline problems like biometrics and identification, authentication, KYC off the table, all the better, Chalu, let's go build something a little more advanced. And so for most startups, even now, when they start to complain about these things, I think that, they'll crib for a little while and then keep innovating. The same could be said, frankly, for a lot of the lending fintechs in India now with the very progressive, interesting new OSIN, the sort of digital lending infrastructure that was launched by the government a couple of weeks ago. There's a lot to do around that is disruptive for some of these lending startups, but all the more reason they can move 5 steps forward.
Right. Back to you, Varun, on this point. And I know that you are actually getting ready to launch your book. I'm not sure if you're willing to talk about that publicly or not yet, but I wanted you to share your views on this, and if you want to give our audience a preview of what to expect in the new book that you're about to publish, here's your 2 minutes.
Thank you so much for giving me the prime spot for that. I should change my background image for the book now. Just to give a background, one of the key things which, as we live in Singapore, has been, we've seen for the startup, there has been a lot of clearly defined articulation about how the startup hubs look like. Israel has been a great example of how they built a startup nation. And over 5 years, what we have built in Singapore, we'll be releasing it at the Singapore FinTech Festival, and Aditya and Amita helping, Mushir is helping as well. There are like 75 people come together to create something, what we are saying, Singapore, the FinTech nation, a playbook for any country to replicate a FinTech hub, which looks after how regulations, people, sovereign wealth funds, private individuals, corporates, everybody comes together. And in Singapore, we call it Kampong spirit, the village spirit. So the whole village comes together to raise it as one of theirs. And that family is what the story is what we are bringing out. And we look forward to bring all of you as part of it. And one of the key aspects of Singapore is it's a 5 million people market. On its own, it can't do anything. 95% of the revenues of companies who scale and build here have to be global. So if you are born here, on day one, you have to go out. There is no way you can succeed and scale just living here. And that is something which we are bringing out, how in the world of great decoupling, you live as you perform the balancing act between the two powers.
So, on that point, Chandan, you don't have that problem, right? You don't have a market problem. You have billions of people to sell to. You don't have just a few million like in Singapore. But I want to ask you a slightly different question, Chandan. I feel like today, we have a lot of this support system that is in place between large companies, small companies, investors, the various catalysts. That wasn't the case 10 years ago. At least I didn't think so. In your view, now MobiKwik has been around for 10 years. Do you think that MobiKwik might have taken a different path if you had a different support structure in place in your early days as a company?
Just to clarify, you mean to say support structure in terms of the architecture and infrastructure which is provided by the government for payments?
So I'm seeing the support structure just like Varun described, right? It takes a village. It takes all of the various parties to have, an intent and the tools to work together more seamlessly, right? So today, not only do you have the utilities and the rails, right, such as UPI and India Stack, but you have a variety of tools such as bank accelerators and sandboxes and regulators actually understanding technologies and investors, not having the herd mentality as much. They are being more thoughtful, I think, than 15 years ago. That's what I mean by support structure.
So I think, as you rightly said, that India is, more than 1 billion people, we have here. And the demographic of India is very, very diverse, so without that, so think about it that in Southeast Asia, if you combine like 6-7 countries, in terms of demographic and, interests, habits and everything, this is what here is in India in one country. So if you start any business in India and if you want to reach any scale, that support structure is definitely required. Without that, it's not even possible. You can start a business in a very small, in for example, North India, just be a service provider or a business which is focused on Delhi NCR or Bangalore if you start. But without that support structure, it's not really possible for any company in any of the fields, any startup for that matter, to really scale up. And I think it has been very, very important in terms of, so the way I see it is, it's more about, going to the question that you asked, Melissa. So in terms of the support infrastructure, providing standard rails, by government, for example, UPI, RuPay, all the support structure which government has pushed down and provided to everyone has created opportunities for people to innovate in terms of innovate as well as focus on their own strengths. So we don't need to worry about that how the transaction will be processed. It's taken care of. Now I can think about that for what I want to process the transaction, which user I want to focus, right. For which service I want to provide to the user. So this innovation is actually happening where it's required. This is basic structure. And if it was not done by government, then some private companies would have done it and they would have owned it,
right.
But I don't know what would have been the cost. Now, for example, UPI government has made it zero. That means that nobody worries about using UPI. No one has to pay any fee. Merchant also doesn't pay and the user also doesn't pay. People just make P2P transfers for free. So people are more receptive of this fact and they are willing to use the infrastructure which is driving digital, again, inclusion. More and more people are willing to move to digital payments just because there is no cost, no worry, it's instant settlement. You just get it in your bank account, debit it from your account, credit it to another person's account instantly, So I think the overall support system, it has been incredible. And I think that is what is going to drive, what comes next. Now, real creativity is, being tested, I would say, that,
So I'm going to come back to the free versus paid thing in just a couple of minutes here. But Ronit, I want to ask you about this notion of a support structure centered around a large entity. I come from the telecom world where I did not have the benefit of such support structures. And what happened? We completely, cleared the way for the big tech to come in and to disrupt on top of us, right? We became the proverbial dump pipes as a telecom industry. Not because we wanted to become, but because we allowed that to happen by not embracing the ecosystem and managing it. I saw that in telecom. Now, as I look at just our own journey at Medicare the last, 7 years, I feel like there is a shift happening in front of our eyes. It used to be that the banks and the big payment networks were trying to create kind of their ecosystems around them, where, you had all the various hackathons and accelerators and incubators and labs and challenges and open API, this and that. And again, I'm not seeing that in any kind of a negative way. We are very proud to have partnered with many of them as customers over the years. But I'm also seeing a shift towards that ecosystem leadership, shifting towards technology companies, cloud providers, non-financial institutions who are saying, yes, there needs to be a support structure and an ecosystem, but instead of waiting for a city to be in the center of it and putting up a big tent, I, as a big tech company, is going to put up a big tent. Are you seeing that? Do you agree with me?
Yeah. So I think there's the space here for innovative banks to put up tents and for big tech companies to put up tents and everyone in between. It's not going to be either or. Obviously, there's also a risk of, if you take ABC, generic bank, doing hackathons and CVCs, corporate VCs and innovation units and innovation hubs or whatever, there's a real risk of, sort of lipstick on a pig, because frankly, from either an industry perspective or from the bank itself perspective or the broader economy perspective, a lot of those initiatives don't really add much value if they're not done properly. Because, if you don't connect all those big tent initiatives with something inside the bank, it's no good having it kind of on the outside of the bank. Nothing really gets done, hence the term, derogatory term, lipstick on a pig. But I think the future is going to be, and the present is one of partnership, where there are certain things banks, particularly when we think it's the world outside China, because China is its own kind of, its own special kind of market in a way. But the rest of the world, whether it's India, Middle East, Europe, Africa, Americas, there are certain things banks will do or regulated financial institutions will do. And big techs don't want to get involved in that. So you can see loads of big techs now partnering in the last couple of years with banks, whether it's an Apple,
right.
It goes on and on, right? So partnerships is the way ahead. Sometimes big tech tries to do it on its own, but even, the most of the big techs in the West, the one that does things on its own, historically Facebook, even Facebook is partnering. Look at WhatsApp in Brazil, right? The most recent iteration, it's Visa and MasterCard that they're partnering with. So there's a lot of, I think partnerships are the way forward. It's neither big tech doing it or big bank doing it. The final point is about resources and willingness. 10, 15 years ago, big banks had market dominance. Varun talked way earlier in this conversation about antitrust. Coming out of 2008, big banks were in the, there's a bullseye on them from Congress, from Capitol Hill. And banks then went into some sort of retrenchment phase. And it's going to be interesting to see how that plays out with big tech in the US. Because there's so much around, and fintech and big tech are finding this constantly. Financial services is different to social media. You can't just move fast. It's not like taking on taxi unions or the local municipality. You can't move fast and break things. Central bank will come in and shut you down. So that's the opportunity, if you like, for the banks, because there's something banks are really good at, which is dealing with regulation. Tech companies are really good at platforms and clients. Maybe they can work together.
Look, absolutely, and I actually do agree with that point. And over the years, as people have complained to me about, hey, there is so much regulation, we have to deal with compliance. I'm like, guys, that's an asset. the fact that you have guardrails, the fact that you have regulation, and if you can deal with that, you're going to stand out, right? You're going to stand out because if you don't look at regulation as a strategic asset, or I should say the ability to deal with regulation as your strategic asset, then you should not be in financial services. This is the industry. Deal with it, right? Deal with it. Don't complain. So look, and I think to your point, we actually have seen just in the recent past, just the last couple of weeks, there was an announcement, IBM and Bank of America, partnering with the financial services cloud. I saw just a couple of days ago, AWS and Global Payments, right? They announced some partnership, and I do expect this trend to continue where we have, big tech and big bank come together, right? And what I strongly believe in also is that it is a combination of fintech, big tech, and big bank that's ultimately going to do big things, right? So, I want to start wrapping up here in the few minutes we have, and talking of big things and talking of a crystal ball, I want to give each of you a chance to just tell us how you see the future or how you want to predict the future, right? If you were to pick one big thing or one big partnership or one big news, or even if you were to invent, a headline, a front page headline from 5 years from today, what would be that, eye-popping big headline in our world that you can anticipate, in a few years? And you can feel free to use your creativity here or imagination or whatever you want to use, but anybody who wants to go first on that one. What's the one big headline, Varun?
So one headline for me would be mass commoditization of financial services, where 80% people's needs will be taken care by commoditized players, and there will be specialist players for specialist things. But the way messaging, as you mentioned, telco, WhatsApp commoditized the P2P messaging, Zoom commoditized peer-to-peer video pieces. So you will have a mass commoditization across financial services for the largest part of the value chain, while letting the niche players emerge on the other end of the spectrum. That for me is the big change.
All right, so commoditization, taking front and center, front page headline. All right, got it. What would be, in your view, Melissa, a front page eye-popping headline 5 years from now?
Okay, front page in the Wall Street Journal or FT in 5 years is big tech in US partners with, large fintech from India, Indonesia, Brazil to revolutionize their US and European, market expansion and product.
All right. Okay. I think that's a good one. I think you covered 2 or 3 points in that one. Chandan, what would be the big headline that you foresee?
I think as Varun rightly, he has already covered, what's going to happen. Because of the commoditization, I think the biggest change which is going to happen is that in India, in terms of population, 50, 60, 70% of the population will be comfortably on digital platforms, either it's for financial services or, for any kind of commerce, which will be a big deal. Which has been kind of government's objective also here to push everything digital, moving away from cash economy, and the trend will continue. And I think that is what is going to be a big thing, here in India.
Got it. And Ronit, you get to have the last word here as we are coming up on the hour. One big headline that you want to see.
I think a lot of the important topics have already been touched upon by the other panelists. Maybe I'll throw out the, I think it's one headline, but when it comes to, say, the front page of the FT or broader media, the nature of money. So all of us fintech specialists are talking about CBDCs and digital currencies. Crypto, particularly during lockdown, you've seen an increase in crypto trading, particularly amongst millennials and younger people. I think that just the nature of money is being questioned in a super interesting way. I think that'll be interesting. So this year, we're talking about trial runs of, CBDCs in China, but actually seeing it in the wild, could it happen in the next 5 years? I don't know, but that'll be super interesting.
Right. So no, thank you again so much for sharing your thoughts. If I could just wrap it up and quickly summarize and just add just one comment to that, before we go. I feel like we touched on a lot of things. We could have talked for hours and hours, right? We covered a few different things, especially around the importance of solving problems, right? It sounds like a cliche, but people sometimes forget. We talked about the importance of nationwide regional infrastructures that actually raises the bar for innovation. It can be a little bit frustrating in the short term, but in the long term, it benefits everybody. We also talked about some of the regional differences in terms of how we are seeing different parts of the world learn from each other, and it's only a good thing. And then we talked about the various coalitions that have been forming and are going to continue to form in terms of the large entities, helping form those support structures for the younger entities to thrive and for the whole ecosystem to thrive. I would say just one final comment here that is important for all of us to remember as we talk about innovation and technology and all these great things is that it is important to think about the world we live in today and the special times we live in today, and how this pandemic is forcing us, especially in the tech world, the digital world, who are relatively untouched. If you compare ourselves with people who have lost their livelihoods, don't have access to basic necessities, and are literally at the risk of losing loved ones because of the pandemic as we wait for a vaccine. We are indeed fortunate. And I think for me personally, this gives me an opportunity to reflect on what truly is innovation, what truly deserves our energy for the future. What is it truly that we need to do as a fintech community in solving real problems for real people, which have a real impact on people's lives and the economy at large. So I just want to end this with that reminder to ourselves that let us think of fintech innovation in a real sense that makes a real difference. Once again, thank you to the audience for being patient with us and the technical issues. Thank you, Mushir and the team, for inviting us. And thank you, Melissa, Chandan, Ronit, and Varun for being such great sports as we had this fantastic conversation. So thank you, and back to you, Mushir.
Thank you so much, Aditya. Phenomenal to have you traverse through different mediums to make it through. We've covered over 12 time zones in this conversation. The Virtual FinTech Fair came about as a result of the pandemic to disrupt events in some senses, right? It is ironic that a lot of tech conferences were taking place manually, physically, and probably it was about time that we had more tech conferences using technology, although it's a work in progress for a lot of time. So I'd like to thank you all for a brilliant panel with great insights, a topic that's very close to my heart. And I definitely see the headlines that Melissa was mentioning about in 5 years' time, and probably much sooner than that if certain things fall in place. So thank you all. We've had a remarkable 2 days with over 3,000 delegates, 80 classic and leading thought leaders. And a big thank you from Sherry from Nosphere Media and me to the rest of our team for putting in a lot of hard work, and to all of our partners and sponsors for their tremendous support. These videos will all be available on the platform for the next 1 month. So if you haven't got a chance to see the other videos, please log in and avail of that opportunity. And once again, thank you all, and good night, stay safe, and start becoming, taking FinTech virtual. So VFF will be back next year. Thank you.
Thank you.
Thanks.